Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the Japanese yen, but some other currencies also are forming not bad setups, or maybe it's better to say not quite the setups, but for example on the euro currency, recall our recent conversation on the conference about the conference support on daily charts 110 area, and we said if market will fail to pass through, fail to hold there, this could become a real challenge on the bearish continuation, and the first destination point will be 108 FIB support. And now if you'll take a look at the euro currency chart, you'll see that market almost has hit 108. The breaking of the 108 will definitely lead to the further drop, and will open the picture, will open the road to big bearish pattern. That is the butterfly. We have discussed this. So the fact that market has broken through the 110 confidence makes us doubt about the strength of the 108 area. So if the confidence area hasn't held the market, so what the chances that just simple 108 area will hold it? And the bearish pressure is growing right now on the euro currency, and if we will see that breakout of the 108, that could really start the march right to the parity in a medium-term perspective. So this is very important. Another tactical setup that's now is forming on the Canadian dollar. So recall our butterfly that we have talked in last week, and right now it stands very close to the completion point. But still, both of these setups, as on the Canadian dollar as on the euro currency, could still wait for 1-2 sessions more. But on the Japanese yen, the situation stands very close to clarity, and that's why I decided to take a look at the Japanese yen right now. So if you remember our recent discussion on the Japanese yen, our major conclusion is that market bearish. So right now I am speaking not on the Japanese yen directly, but on the currency pair. When I say bearish, it means that United States dollar Japanese yen currency pair. So we have the bearish view, and in the long-term perspective, but currently market right now is a bit overextended to the downside. So we know that in the weekly chart, market stands at the oversold and it's very close to the FIB support. This 1060 area is the weekly FIB support, and you can see the market stopped. Last week we said that hardly market will create the new bottom. It could fluctuate in some range, but it will not exceed the bottom. It will not create the new bottom, because market is oversold on the weekly chart, and when market stands at oversold on the high time frame, it leads to show some coiling inside of this near the bottom on the high time frame, but it will prevent any challenge on dropping below the lows. And you can see this really has happened. So market has turned down, but it wasn't able to create the new bottom. And we said that probably market could turn to some consolidation or to show some retracement here. It will be absolutely logical, but we wasn't able to estimate definitely the pattern that could trigger this upward action. First, we thought that this could be ABCD pattern. When market has dropped low, we said that probably could be the double repo lookalike or something of that sort, and it's really this pattern has been confirmed. And particularly this action that we see on the current week leads us to the resolving of this riddle. So as the double repo already stands in place, and the last pattern that we have discussed, if you remember, was the butterfly. So currently, guys, the most part of our gambling about this possible pattern already in the past. So the double repo pattern has been confirmed, but take a look what has happened. Market dropped lower and has formed bearish engulfing pattern. Sometimes this happens when the double repo is forming. As you can see right now, moving average holds action very well So you can see this valley on the moving average holds this retracement, so it's covering it right from the bottom. But the fact of the existing of the engulfing pattern here is a bit worrying moment, because if this engulfing pattern will work and lead market to the minimum target, we will get a double repo failure. That in turn could trigger the downward continuation here, because getting of the double repo failure is not just the canceling of the direct double repo pattern. This is new directional pattern that should push market in the opposite direction. So in our case, if direct double repo should push it higher, and the double repo failure should push it lower. That's why, as you can see, we stand very close to the resolving of this riddle. So if market today, for example, will drop below the moving average and will close here, this will be double repo failure pattern, and this will tell us that we will get only the one pattern that could be formed here that theoretically could trigger any upward retracement here, and this pattern will be butterfly buy, as I have drawn it on the 4-hour time frame chart. Personally, I probably would bet for 127 butterfly rather than 1618 by two reasons. First of all, because 1060 is weekly fib support, and market could, for example, by grabbing the stops that have been placed below these lows, could reach the 1060, maybe 10 even area, but hardly will drop lower, because market simultaneously is oversold on the weekly chart, and this is really some real barrier for a market right now. It can't just pass through it occasionally. This is really significant support, and when the market will touch the 1060 and reach the oversold, this will give us the weekly bullish stretch pattern on the weekly chart. That's why currently, guys, I personally would bet for just 127 target of this butterfly. Also, as you can see, we have inner ABCD pattern that also has the same target. That's why 10 even is a probable area that market could reach, if of course we will get this failure of the double repo. Market will drop lower, here will continue move down, and maybe this pattern will trigger finally medium-term retracement up on the Japanese yen. That's what we'll be watching for. On the hourly chart, guys, right now, here's the swing of our engulfing pattern on the daily chart, and market right now stands in upward retracement back inside of the body, so of this engulfing pattern. So we can see that it already has passed this conference resistance. Right now is approaching to the weekly pivot point, has been broken previously, and this will be the 1329 is the 618 resistance. So maybe somewhere in this area, at least this often happens, this market forms the engulfing, it usually shows a retracement to the 618 maybe, and then start move down. So we can't call you to trade this, and do not want to do this. Personally, I do not want to advise anything here, because, guys, as on the gold market, our major task is to get a good point for short entry on the Japanese yen. So this is the secondary product, this is a sub-product of this setup, is the butterfly that we just have discussed, and the double repo pattern, and so on. So this is just additional tactical setups that is forming right now, mostly for the scalp traders. So if you trade only on intraday charts, on the 15-minute chart, you could try to do this. But we just warn you that trading of this setup brings additional risk, because market has the strong bearish sentiment, and you will try to trade it against it. So this will be a bit really risky. So that's why it stands mostly upon you, this choice. So would you like to trade it or not? Because this really is a bit, well, it will be just difficult to do. So it will not be easy task to trade this setup right now. But if you would like to do this, so here how you could do this. First of all, you should watch for this area probably as a potential where market could turn down. Here you should drop your time frame to the 15-minute chart and watch for reversal patterns here around the fib support. If you will get it, you could try to take the short with the stop based on this reversal pattern that you will find on a 15-minute chart. So it should be rather close. When the market will stance move down, you should move your stop to the break even. So by this action, you will possess yourself with this bearish engulfing pattern. Later, if market will drop lower, you should control whether we will get the double repo failure pattern. If we will get it, you could keep your position and wait when the market will turn to the forming of this butterfly pattern. So this position and this trading on the intraday charts will demand additional control and uninterruptible control for the position, monitoring different events. And what you see right now, so it's really fast action in opposite direction. So as I said, this will be really a bit nervous setup. But still, this will be an experience, and it could be rather interesting. So that being said, currently we're turning to the monitoring of this possible butterfly, and later we will see what will happen, whether this pattern, if it will be completed, whether it will trigger any meaningful upward retracement here.